we're going to go ahead and get started because we have a lot of people joining here us talking about financing, as fun as AI is. But let's get this rolling here. So first off, as usual, welcome everybody to our end of year wrap up live stream. I'm so excited. I can't believe it's the end of the year already. I'm already starting to plan 2024 topics. So if there's anything you want to know about in 2024 on the live stream, put that in the comments and I'll see if I can work that into our schedule. First things first, I'm going to go round robin, have everybody introduce ourselves. Alessandra, you're first on my side over here, so I'll have you go, then Steve, then John and Emily.
All right, great. Thanks, Jess. So my name is Alessandra. I am the head of data at Prospector. I have about 12 years of experience working for the mining industry, mostly in the financial and economic side of the industry.
Steve DeJong at VRIFY. I'm the only non-Prospector person here. I've been in the mining sector for about 15 years now, the first 10 or so on the company corporate side, and now running VRIFY, technology company that services the sector. Thanks for having me.
All right, does that mean I'm next? So John Godby, I'm our CTO and one of our co-founders, and been about 3 or 4 years of mining, but in technology, it's been over 15 years. My background's in economics and applications of AI. So.
Yeah, and I'm Emily, the other founder of Prospector and our CEO, geologist by background, and good idea fairy extraordinaire. Like to dump all sorts of fun things on folks. So yeah, look forward to the chat today.
Awesome, thank you. Steve, by non-prospector, you mean very special guest is the introduction there. Yeah. Awesome. So quick little plug here. I just wanted to go over, I'm super jealous of the Spotify Wrapped. So I created a 2023 Prospector mining data wrapped for us to go over before we really dig in. And I'm super excited about it. So for this year, most of you know we have a weekly newsletter that goes out. These were our top headlines or most clicked headlines in the Nugget newsletter. Graphite, issues facing mining, and everybody was super excited about Thacker Pass. So that's really exciting. Of course, On the Rocks is our podcast, and I was super excited. We were streamed in 53 countries, which is amazing to me. We were the top 10 podcast for almost 300 fans, 5 more people through the end of the year. If you can get those listening numbers up, that'll make me very happy. And a special thank you, of course, to all of our guests, including our special guest today, Steve. Thank you for joining us on the Rocks in 2023. And then finally, some data reports by the Prospector team. This year we explored lithium, uranium, and Colombia. Kind of threw Colombia in there, and it's been one of my personal favorite reports so far. Teamed up with Global Scout on that one. Boom, quick Prospector wrapped. So today, as you probably have heard through the grapevine or in the Nugget, or you might have guessed, we are talking about mining industry financing. And this has to be one of the major trends in 2023 that I've seen so far. I don't know about all you guys, but it's been in conferences. It's been in the news. It's been all over social media. Steve and Emily were both on a panel earlier this year discussing this. And so it's just everywhere. And I thought it would be cool to really dig into it with some experts. First off, I wanted to throw it to John and Alessandra, because with the 2023 industry data, we've seen a huge interest in mining projects, movements, especially in the critical minerals space and lithium. What regions and minerals really seem to be making the moves in 2023?
Okay, I'll go first. So the general trend in projects, developments, expansions, and even acquisitions have been linked to critical materials. We have the M&A transaction between Newmont and Newcrest that also serves not only to consolidate them as a top gold producer, but also give them a very solid position in silver and cork, which is one of the critical material for this energy transition. And the same for BHP with acquiring OZ Minerals by the end of last year. That means that they have the same trend into acquiring minerals that are critical for the energy transition. That means in their case of BHP, will be acquiring copper and nickel projects. I think that the top countries that make some M&A, big M&A transaction have been the case of Canada, Australia, some movements in Latin America, but mostly from, as I say, Australia and Canada are regions that have developed or makes most of that transaction related to critical materials.
So the only thing I would add is I think that lithium is kind of been a big thing. Like you're seeing just the number of technical reports for lithium projects is, to me, astounding. And I think that, you know, all the legal issues around Thacker Pass would be interesting to see if it kind of can get past the bar and get going. I think it, you know, this desire to find sort of more domestic supply of lithium is a big thing in the U.S., right? And I think you're seeing that reflected, maybe not just in the U.S., but North America in general. And so it'll be interesting to see what happens in the new year. I mean, I don't think the lithium price is coming down. I think it's only going to go up, and it's clear that, you know, we need a lot more to go over what's going to happen. And I think, especially with some of the legislation coming out, you know, the way that EV companies are going to get the tax credits for when they sell their vehicles, they're going to have some lithium that's domestically produced in them. I don't think you get around it, and that goes for cobalt and the other metals as well. And it'll be, you know, I think this is reflective of the desire to find more mines in North America. It'll be interesting to see what the new year looks like.
So on the more investment side of things, right? One thing I hear a lot, and we see a lot in the headlines, is that there's this increased interest in mine materials, whether it be for these EVs or whether it be for gold or even industrial minerals, right, for infrastructure. But there's still such a ton of capital coming into the space. So Steve and Emily, again, I know you both have chatted about this a ton, but I was wondering what kind of input you have on this. How can we decrease that funding gap, etc.? I'm not sure which one wants to go first.
I should let our esteemed guest go first. Steve?
I kind of think you have to almost break them into three different categories. I think we have precious metals. We have critical minerals that for the called the EV transition or the energy transition. And those are things that go into batteries and cars and things like copper and lithium and so on. And then you have your sort of traditional more base metals and your iron ores and things like that. I think it was about a week ago, gold hit an all-time high, and then silver was sort of coming alongside. I was one of those people that after 7 years of getting beat up and being involved in the sector was very, very excited that this is the end. And that kind of, it was up $50 on Sunday night. And then by the next day, it'd taken a $100 turn and was down $40. So I think for if we look at those three categories, I personally think we're really close to seeing a big run in the precious metals. And I'm not one of those, I'm not sort of the talking head of the sector that just talks about gold's always going to go up. And eventually it will. It just feels like we're at that point. And if that happens, I think you'll see literally dozens of precious metal financings take place in a 1 or 2 week period. You've have all of these companies sitting more on the, I would say, on the exploration development side, less on the producer side. And a lot of producers have really cleaned up their balance sheets on the earlier stage ones that are just waiting for that window to open so they can fund themselves. I think that's, so on that side, I think it's very much a commodity price driven exercise. If the commodity price of the precious metals takes off, I do think you're going to see that funding gap, vacuum, whatever you want to call it, close essentially overnight. And I'd much rather be where we are now, where we're sort of $30, $40 away from the all-time high versus kind of $500, $600 away from the all-time high. It feels like we're in a nice position. I'm saying there's a chance. I don't know enough to be totally honest on sort of the traditional base metals, iron, like the bigger ones, but speaking to the energy transition metals or critical minerals and things like that, it feels very much like we have this environment that I don't think the industry has ever had before, where you have general interest in what we're doing because we finally have that connection that, hey, I like my electric car, or I like my Tesla, and where does the metal come from this? Traditionally, that was always sort of, it's oil and gas that drives these things. So I think that we have that sort of, I don't know if groundswell is the right word, but we have that general, I would not the public's approval, but I guess interest or understanding or appreciation for that connection between what we do as a sector and sort of the day-to-day uses of that. What we haven't really seen is just that transition into actual investment. And I think you're seeing a lot of, now let's government funding, let's build a battery plant, or let's help push these projects forward. But day to day, you're not seeing copper, lithium, I guess we did see for a while, and there's still some interest there. I don't know what that's going to take. I think the commodity price is really going to help, like if the copper price goes or anything else. But I think it's just a continuing sort of educational process to remove those barriers where you have a lot of investors that are traditionally just don't invest in mining. And I think that work to be done to educate them on the value of mining stocks and mining investments and kind of creating the supply for the next group of mines that are going to fuel the energy transition. I think a lot of that work's being done. And I think over the next year to 5 years, you're just going to see continued interest, little like chipping away at it more. So my view on the two things is precious metals. I think we're days, weeks away from like a really exciting market in that space. And on the other side, I think you're just going to continue to see more and more interest come into the energy transition metals over time.
I would say, I think we have seen a non-traditional source of capital come into the market in a big way in the last year. It's just not the one that everybody wanted or expected. And that is like government money has entered the chat, right? Like there is a lot of talk about different governments, and just to focus on the US government, right? There's been US funding allocated to projects in different ways, different agencies. Other governments are talking about it last year. I mean, Saudi Arabia made a huge announcement after FMF this year in January with Ma'aden and their sovereign wealth fund that they were going to start investing internationally, right? You're starting to see like governments get involved in investing directly in mining companies, mining projects for strategic reasons. They just may not be doing it in the way that the industry wishes they would do it. It might be different projects than folks in the industry would expect to be financed. It might be have different strings attached, certainly from like a US government perspective, right, than a normal kind of mining investment group would. But I think it's also creating confusion around like there's all this talk of critical minerals, certainly in the US and Canada, like domestic sources of critical minerals. The government's saying they're going to do all this stuff, and yet they're, you know, denying permits for other mines that are really far along. Like, what's going on? Where is the money going to go? How is this money going to operate? So I think that's been something else that has created a bit of a frenzy around how do we market our company in order to be able to tap into government money? Like, how can we take our gold project and turn it into a critical minerals project? Right. I would be, you know, Steve, I don't know if if you guys are seeing this, like all of a sudden companies are starting to highlight, you know, byproducts maybe before weren't something that anybody really cared about. But I kind of sense that going on, as well as in particular on the gold side. I think the groups that are buying up these massive amounts of gold, like central banks internationally, are not the same people or groups that buy gold mining company stocks. Right. So you've got this weird dichotomy where central banks are buying up massive amounts of gold bars and bullion and stuff, but it's not like they're going to buy stock in juniors. Right. So I think that's part of the other piece that's certainly confusing to me, at least, as to what the heck's going on with all the money.
Yeah. And then you also have the backdrop of like, if I can make 6% of my GIC and I'm kind of worried about the economy in general, do I really want to take a punt on a junior gold company and the volatility that comes with it? And I think we saw it yesterday where just the guidance that was given on upcoming rate changes and potentially dropping rates, and gold's up $50 in sort of a matter of minutes. It's sort of, I don't know. One thing we did see a lot of, and I think it's just junior companies and like these are entrepreneurs that will do whatever they need to survive. And I mean that in a good way. But you did see a bit of kind of the gold company now has a lithium asset and so on. And I think you're naturally going to see that, and you'll see the news flow from these companies work its way back to being kind of precious metals focused, if that's the environment we're in. And I'm one of those people. I don't think that's a bad thing. Like, your job as running one of these companies is to kind of achieve the highest valuation possible, reduce the cost of capital, and push your project forward. And sometimes that means kind of allocating financing, capital, attention, resources to different elements within your project. I do find it fascinating that a lot of these gold companies actually had lithium on their projects the entire time. Like a lot of this isn't, I picked up a new lithium project. It's like, we forgot to look, or we didn't, in the past, it was never worth it for us to look over here, which is, one of those interesting things that's come out of this lithium market that we found ourselves in.
We kind of briefly glazed over this, but I'd like to dig a little bit more, and we have lots of comments coming in, so please keep those up. Any questions we'll kind of save towards the end here. But with more eyes on the mining industry, we talked a little bit, Emily, you mentioned like government financing and stuff. What ways can we attract kind of more of this capital? Alex mentioned transparency. Peggy mentioned desire for green and clean. What, embracing technology, and Steve, I know you've talked a little bit about AI and changing like press releases the other day. What kind of ways can we bring in and attract these different groups to the mining industry? Deeper dig here. Gosh, we can go round table on this.
I'll kick it off. I think when I'm talking to folks, they typically start by looking at a commodity, right? They typically have a commodity that they're interested in if they're looking at mining investing for the first time. And there will be some kind of product or, industry that has kind of gotten them to take a look at that, right? I mean, I find that to be pretty often like, oh, I never really understood how important mining was until I started looking at electric vehicles, or I never understood how important copper was until I started working with this infrastructure company. So I think like commodities attract people's interest first because it's something that they can relate to. And then they typically will start to look at either at a company level, if they're like a retail investor, or at a country level, if they're looking to invest in a single asset. And I think that's a big differentiator that I see in terms of how people start to research or look at mining. They either have this idea of like, I want to own part of a mine, which is a really fun thing to do and be part of, right? Or they're looking at the corporate level. And I think the reason I say that's important for folks to understand is in how you tell your story. And I know this is where Prospector and VRIFY are super aligned. Like, I think we in the industry have to tell stories about what we're doing and how it connects with people from an end user perspective, and also the story of the business, right? How is the company you want this person to invest in going to eventually make money? And I think especially in the junior, or as we're trying to call them now, explorers, right? Not be so dismissive, but in that space, like, you've got to be able to tell folks up front, look, I am never going to build this mine. Here is the exit strategy. If you come in as an investor, here's what that looks like for the money you put in. And I think that's something that we don't oftentimes do well within the mining industry, is tell that story of what your investment is going to deliver and how you're going to make your money back.
Steve, you wanna take a run at that one?
Yeah. I think I'll focus on one of Emily's last points on just the making money side. Like, the reality is people invest because they want to make money, and it's not because we're all greedy, capitalistic, evil people. That's why you make an investment in something. And I think, like, if I'm going to invest in a stock, for me personally, I approach it very much from like, will this stock price go up? And then you have your filters of whether it's commodities or kind of ESG record or team or other things, and whether or not it sort of passes the test on those other elements. I think as a whole, you're going to see a bit of, it's almost like a bit of a self-fulfilling prophecy. And I think, again, not to go back to precious metals, but we started to see it last week, where there's a lot of companies that were up 30-40%, because for 2 years, the narrative has been very much, if I can make this much in a GIC, and all of these things that in the sector tend to just go down, and that's sort of been this environment in, why would you take the risk? And then overnight, it seems like, and again, this is precious metals in a small sample size, but overnight, these like things are really starting to move. There's an element of, it's whether it's FOMO or greed, or just the fact that you want to make investments that are worth more after you make them. As soon as that starts to occur, that drip rate that starts to attract capital, and that in itself, if there's more buyers than sellers, drives share prices up, and all of a sudden you have yourself in a market where that people are kind of crawling over themselves to get into. So I actually think it's going to ultimately be super simple in that what do we need to do to attract capital to the sector? What's going to change? It's the second people start making money in it, you're looking at, say, your portfolio, because if you look at, say, the last 5 years, and you have your mining, your tech, your bonds, whatever it is, mining is an underperformer, even though a lot of other sectors haven't done as well too. The second mining is kind of an outperformer of those. What you're going to do is take other capital from other sectors and shift it on over. And the beautiful part of mining is it's actually such a small sector. You get some of these $100 billion, $1 trillion pension funds, and they decide to go from 0.25% to 0.5% allocation into precious metals or critical minerals. And you've just seen sort of 25, 50, $500 million come into the sector overnight. And that's the size of some of like what we consider now the big resource funds within the space. So it's, yeah, in a lot of ways, I think it is ultimately people need to, I think the industry is doing a better job of showing the connections to what we do as a sector and why the world needs that. But I think that connection is ultimately just ticking a box, and it's probably lower on the list than if I put money into this, is it going to be worth more or not? And as soon as that starts to occur, I do think you're just going to see money flood into the space. There's a lot of people, whether it's your own capital or you're managing a pension fund or a fund, your entire job is to increase the value of the portfolio you're managing. And if mining can put its hand up and say, hey, that's going to be us for the next 3 years, that capital will flood in.
Awesome. I love the simplicity of that. Just got to make people money. So speaking of that leads me directly into Alessandra, with your financial background. I really enjoy learning from you. Even if we bring more capital into the space, mining costs for these projects are still overall rising, right? So from an economics perspective, what kind of things affect project costs and investment, and how has this changed over the past few years?
All right, so we talk about capital. Bringing capital is expensive, especially nowadays that the interest rates have been going up, and some companies finance those projects with debt. That means that it is costly to get projects. Also, most of the investors in the last probably 3 or 4 years have been valuing ESG. But however, ESG, with all the benefit that it brings in a shorter term, is something expensive that needs to the company to allocate some capital to invest on practices that comply with the ESG policies. In very, very brief, there have been some even standards and things that we hear about that topic. In terms of costs, we have seen really big companies making adjustments in cost, optimization of processes and everything. We have heard a lot about BHP or Anglo-American companies of that magnitude that have been focusing more than ever in costs. What we have seen in general terms in the industry, we have seen a rise on the prices of labor, energy, material that's linked to the inflationary pressure. And so that brings all the prices high. However, if we evaluate, for example, in the cost of energy, although most of the mining companies are walking towards the path of decarbonization, the mining industry still depends on fossil fuels. So seeing, for example, the war in Ukraine or what happened in the Middle Eastern is increasing the cost of energy for the mining companies. Remember that probably more than 80% of the energy provided from that uses the energy that mining industry come from those sources. Then in terms of the cost of labor, it has increased. First, because of inflation, and second, because there have been a shortage of people, of skilled workers in the mining industry. That means that not only you have to hire the range of wages to the professionals in the mining industry, but also in order to maintain or attract the most valuable talent to your payroll, you need to pay more compensation and more benefits. That means that it is a cost, also a cost that needs to incur a mining company. And another thing is that with the increase of the prices of the commodities, something that in general that most of the commodities have been increases in the latest month, some jurisdictions, some countries are increasing the mining royalties. Unfortunately, governments are really good in increasing the cost to mining companies, but not decreasing when the prices go low. So the companies need to be prepared to assume that the cost may continue to go higher. And all the expectations about inflation are that either is going to maintain at the same level or it is going to continue increasing. So we are not expecting to get lower in the medium term, and that will definitely continue affecting the cost to the industry.
Awesome. Thank you for all those great insights. So with all of these rising costs, but also this rising interest in the industry and the supply chain gap, et cetera, that we've been talking about, I'm hearing more and more, and I know Emily has a bunch of thoughts on this, about changing the way that the mining industry is financed. And we even heard this on one of our recent episodes of On the Rocks. People could wave a magic wand and change anything that they want, and it's changing the way that the mining industry is financed. So I know nobody has like any solid solutions on this, but Emily, I'd like to start with you, and then Steve, John, Alessandra, kind of talk about what this means and maybe some ideas.
I think, I mean, if we look at what needs to be changed, I think everyone would agree the industry has not been a stellar steward of capital in terms of being efficient with taking in capital and delivering discoveries, right? So if we can make the industry more efficient at discovery and reduce the risk at the early stage, that will, I think, deliver bigger returns, of course, for investors and encourage more money to come in. But I think that's where I kind of see we've got to shift this like big fish eating small fish model that we have, where all of our wonderful, crazy geologists just go out and wander around and kind of look for cool rocks and then try to scrape up a little bit of money to go get more info. Like, I think, John, you've got the stat, or maybe Alessandra does, like, the amount that the majors are spending on exploration is tiny, right? And that's because the juniors / explorers and the mid-tiers are taking on all of the exploration risk, which is also like the hardest place to get people to buy stock, right? I mean, so it's like we've put all the risk in the area where it's also the hardest to actually make a bunch of money. Or even get capital in order to do it properly. So I would love to see more programs, and not, I mean, I think we've talked a lot about BHP's Explorer program. We've had them on the podcast and stuff, but these models where the majors start to find new ways to get capital down into promising juniors and explorers, right? To help reduce some of that risk, help increase the likelihood of discovery. I mean, I think that's part of what needs to change. And I think then non-traditional capital can come in alongside that. They're just, none of them want to be the lead. If they've never invested in early stage exploration projects before, right? Like, sure, they'd tag along with a major and be like, well, I guess they've done all the technical due diligence. This must be kind of de-risked. I'll go in with them, right? I think models like that would be incredibly powerful.
Yeah, I agree with what Emily's saying. I think that one of the other elements that majors add to it, like every junior out there, especially in a time like this, wants a big company to take a 10% stake in it. It's money. It comes in equity. Usually comes at a premium. It's not the same as a JV or anything else. So you have a little more flexibility in what you spend it on. But one of the biggest things that comes with it is it just validates everything, because every investor, and to Emily's point about generalists, they don't really know. Like, they don't have teams of geologists, and they can't go and do full due diligence on everything, and they shouldn't have to. But when you see that validation come through, and whether it's through the BHP Explorer program is a phenomenal program, and you automatically assume, well, if someone's coming through that program, or if this big company invests in a small company, there's this validation. And what it allows you as an investor to do is just tick a box. The hard part with that is we can't expect just like a small group of big companies to just go out and validate everything. And to be honest, their business model is they're the ones who benefit from this lack of funding in some ways in the juniors, because it drives their valuations down, and then they get to go and buy them at a cheaper price. And that's what they get paid by their shareholders to do, is go make kind of a creative acquisitions and drive value. So I think what it ultimately comes down to is where's the balance? Where's the balance within that? How does a junior go and drive the best value it can for its shareholders? And ultimately, most of those explorers are likely, realistically, not going to build those mines. In which case, not to say that some won't, but it, for most cases, means they need to find a buyer at some point, assuming they can get to that stage. I do think that the juniors, for them, probably spend a little bit too much time worrying about who the buyer is, when the reality is most projects, and it's just a high risk, high reward industry, aren't going to get bought. They should really focus on just ensuring that they have an incredible deposit and do everything they can to get to that point. And if they do that right, the right buyers will show up at the right time. Ultimately, I actually personally, I love the simplicity of just sort of the equity financed junior model. The problem is, in markets like today, when valuations are low, it's like a self-destructive spiral of equity dilution. And you see companies that are $10 million that have to do $3 million financings with full warrants. And they've essentially done the equivalent of a 50-50 joint venture just to pay for 6 to 12 months of their expiration in G&A. I don't know what the answer is to that. I think there's probably some innovative government solutions that could come in and support those smaller companies, because $500,000 in funding towards a small company can change its life and put it in a position where it doesn't need to, or it maybe won't see its valuation driven to zero. Whereas $500,000 in funding to a $500 million company doesn't really do much for it. I think I feel like all of this doesn't matter if the market's ripping, because you can you get a good valuation, you get whatever money, whatever capital you need. But in times like this is where like flow through funding in Canada is such an incredible benefit, and I think keeps a lot of companies afloat. But I personally think there's something to be said about getting access to small amounts of money that keep these companies afloat. Because the nice thing is, if a small company can remove it's almost like the viability factor, where somebody doesn't look at it and say, if this company doesn't raise a little bit of money, it's not going to be around anymore. That in itself, the perception of that drives the valuation to zero, which makes it harder to equity finance and so on. If we can find a way to just remove that doubt, where an investor can look at it and say, no matter what happens, I know my investment's still going to be here a year or two from now. I think that might be a really nice way to support the sector. So I'll put this as a plug to all the governments out there thinking about what they can do to support the sector. Take the 500 companies that within your country, jurisdiction, whatever it is, and find some way to support them. Yeah, to keep them off the very, very bottom, hold them accountable to what they spend that money on, and you're going to set them up to go raise 10, 50 times that much money.
Well, here's a question for you, because I moderated a panel at Stanford a few weeks ago, and it got quite contentious between two of my co-panelists. I won't name them, but I wonder if part of the issue is just almost all of the juniors are public, right? It's the only industry I can think of that has so many super early stage, essentially startups, trying to raise money in the public markets, right?
Yeah.
I don't even know when that started. Maybe one of you guys knows the history of how that came to be.
So I had a fascinating conversation last night with CEO of a $1 billion lithium company, and they're dual listed, so Australia and Canada. And it was about sort of like the North American market and how it's kind of broken in its current state, and whether or not. I was thinking about it the whole time. Is that because there's 2,500 listed companies that are all desperate for capital? I personally, so having gone through it, having come up in the public markets, and then the last 5 years at VRIFY raising capital in private tech, I've sort of got to see both sides of it. And the honest, I really miss the public markets because there's a sort of, you always know where you stand, which unfortunately for sometimes is at 3.5 cents, which makes it very hard. But I personally think like it's a very unique thing that we have in sort of this really, really early stage public funding ecosystem. I think it gets used and abused endlessly, but I think that's because there's other things that we can do to hold it accountable that we don't do. I don't think it's because of the fact that they're actually public. So I'm actually a big believer of these companies going public early, where I think what often happens is partially because the private funding for these companies just doesn't ecosystem just doesn't exist. So there's no real choice. But I think what I like most about it is there is something to be said about investors need kind of the ability to come in and out of something. And in the private world, you don't have that. And anyway, we could get into a long discussion about different things these companies could or we could improve to make the public funding, public company ecosystem more viable. But I'm having been on both sides of it, raising money privately for tech and public company. There's really something to be said about being as transparent as possible, having all of your news out to everyone, and when it comes time to raise capital, work with a group, whether it's an investment bank or someone else, pay them a fee, raise the capital, and get on with your job, versus the concept of 40% of your job needs to always be kind of like trying to find investors and so on.
Yeah, because there is no like venture capital hamster wheel equivalent, right? Like in the mining space. I mean, there are very few funds that would operate that way.
There is a unicorn out there that is on venture capital that
right.
They're not.
And it's got a lot of money behind it.
And there's no I think the other thing is that there's a lot that, like, if you think of some of the programs, the accelerator programs, like the Y Combinators and things like that within the private space. And I think BHP Explore is a very, very small version of what those might be. There's a lot of things that the junior exploration industry, and I very much view mineral exploration and mining as two different industries. Like you're kind of very different objectives, what you're trying to achieve. One's a treasure hunt and one's more of like an operating business. But I think there's an opportunity for the public sector and the mineral exploration companies specifically to learn a ton from sort of some of these early adoption accelerator type programs within the private tech space. One thing I'll say is, having spent a lot of time with private tech investors, they're fascinated by this go public, like get an email address, a website, kind of plot, get a piece of grass, and then go public. Like it's just in the private, it's viewed as like going public is viewed as like the liquidity event or the exit point for your private tech company you built for 10 years. And in the mineral exploration side, it's literally no different than like getting your email address set up.
Yeah,
it's true. I know it's true. I mean, but just going kind of into that vein and kind of talking about, Emily, a bit about the support the big mining companies can have, and talking about sort of the cash troubles of the juniors is, there is a lot of new technology out here. And if we really think about, well, what's the cost driver for the treasure hunt, right? It's drilling holes, right? At the end of the day, how can, and maybe that's the best support that could be given, right? It is about increasing access and the quality of access of information and the ability to use that information to figure out where to drill that hole and to reduce that cost as much as we can for these juniors, because that to me seems like a win-win, right? If the larger companies can contribute to that, to some portion that they would put otherwise into these things, I mean, that seems to me like it's always going to benefit them. But it also, if it's opened up for the juniors to access and make it available, if they can drill 10% fewer holes to get the same resource, or whatever the number is, that has a big effect on the bottom line, right? And if we're looking
just make sure we put the drill hole in the right place, right? I mean, how many projects have you heard of where it was kind of left as being no good, and then someone came and put a drill hole, few hundred meters one way or the other, and boom, right? Like that is absolutely where tech can help.
Yeah,
Yeah.
I can agree more on that stuff. And even at VRIFY, we're working on some stuff that right now that sort of goes to that. And whether it's you're making, like, if you think of, I'm spending $10 million on drilling this year, like you make it 1% more efficient and you save someone $100,000. But, and whether or not you're trying to save them money and drill less to get the same results, or for the same amount of money, you can drill, you can increase your hit rate. It's, and I think it's as much about, knowing where not to drill as it is where to drill. And but the flip side of that, I think, is also in how you communicating that, because ultimately to raise the capital to drill those holes, you need to get investors excited, and it comes in that treasure hunt. So how do you do that? And even when we work, like at VRIFY, we work with a lot of clients, and oftentimes we find we've taken geology, geophysics, all these different technical things, and then we put them into 3D, but they're still being presented to people who don't know what geophysics or geochem or any of these things are. And just because something's in 3D or it's interactive doesn't actually necessarily make it better. Sometimes it can actually be much more confusing, because at least before it was on a PowerPoint slide. And I think that's the other side of it, is kind of breaking down. And again, I call it the treasure hunt, because I think exploration is very much like, and I mean that in a good way, not in it's like this romantic, let's drill this hole and like watch it come out and see if we discovered something. I think if we on the exploration side can do a better job in sort of almost embracing that narrative and moving maybe a little bit away from all the technical background and keep it there for the groups that need it, but much more like this target, we use geology, geophysics, rocks, whatever, historic drilling, everything, but this juicy pulsing orb of a target we're going to drill. If we can get something like that. Yeah, exactly. I think it's something that everybody could invest in. And especially if we start having wins, because like you alluded to it earlier, the private billion-dollar unicorn that's been able to go and raise Silicon Valley money for hundreds and hundreds of millions of dollars based on essentially using AI and machine learning to target. There is capital out there for companies that embrace technology. And I think it's both about embracing technology to make your exploration programs more efficient, and at the same time visualizing it in a way that the investor can ultimately say, I want to invest in this.
I also think, to tag on to that, I heard for the first time a company talk about how they want to use predictive analytics to come up with their next drill program, not just to improve the effectiveness of what they're doing, but so they can submit it as part of their permit package to prove to the regulator that they are doing everything they can to minimize any environmental impact, like that they are making sure that they are doing as much as they can using technology to avoid just
that's interesting. Yeah.
And it's a project that actually is located in Spain, which I thought was really interesting. That is the first time I've ever heard of it maybe being like an environmental risk mitigation tool that you can share with regulators.
Yeah, I've never thought of that before, but that's a really good point. That like the drill pad itself there can be, depending on where you are, a footprint from that, and having
like water usage. I mean, everything. Just making sure you're putting it only in the places that you really need to drill. That again, it just helps the regulator know you've kind of done everything you can to mitigate any risk.
Because we're coming up on the end of time here, we're going to make some space for questions. We already do have, a couple here from our weekly nugget. One of the questions we got was ideas about why people might be slow to invest in mining. And I know we've kind of already gone over this a little bit, so feel free to answer that briefly while I find Peggy's question here.
Yeah, I think it goes partly to, Peggy made a comment too about the use of plain language. I think people very quickly get overwhelmed by the jargon, like the technical language. Do I understand enough about geology and mining engineering to evaluate this project or company? I think that's a huge barrier. I think it's also why people find gold easier to start with, right? Because kind of the way that people at least have seen the show Gold Rush or, Gold Rush movies and stuff, and they kind of have an idea of what gold looks like as a mineral. Whereas when we kind of try to explain a lot of other stuff, I don't think we use that clear language with the treasure hunting analogy and stuff enough. I think we get too technical too fast.
Yeah, I think there is also a trend from automakers to try to vertical integrate it with the mining companies that supplies the material for the EV cars, for the batteries. So in those cases, there are people that is not very directly related to the mining industry. So in order to communicate with them, we need to be transparent, clear, and be able to make them understand all the whole process that involves a mining industry. For us, talking with someone from a junior or for a bigger mining company, they speak our same language, which is not always clear with if we are talking to different industries that are now connecting. Another trend is that, for example, the clean energy industry try to connect with the mining industry since we are in this transition of clean energy. There are some companies that are trying to consolidate with mining companies in the same area. So that will mean that there are some similarities, but it's a completely different industry. So we need to make sure that we communicate with all of these potential clients or companies that we can integrate in a very clear and concise language.
I would
Awesome.
add one other thing too. I think some of the geopolitical stuff that's going on right now, I would imagine is making folks nervous to invest in companies that, which most mining companies do, have operations outside of the country the investor lives in. And I know as a team, we were just on Slack earlier because South 32 came out and said they declared force majeure on one of their projects in Colombia. Right, and we had just come out with the Columbia report. Shout out, it's up on the website that we did with our colleagues, with Jason and the team at Global Scout. But when this stuff starts to happen, they start to hear nationalization or force majeure or protests in countries where there are projects located. I think that's another valid reason why people are hesitant, right? They really are like, okay, I got to really understand it's not the same as investing in a project here in the US, and it's not, right?
It's also like mining. An exploration company is a capital depleting company, right? So I think for a lot of people, right, like if you're investing in Apple, they produce phones. I see them sell phones. There's profit. For an early stage company, great. When you're an explorer, no, I shouldn't say early stage, an explorer. That mine, if it goes into production, it could be 10, 15, 20 years, right? And so you're talking a long period of time. The way to make money is to know the technical jargon and to know what's going on and when to buy, when to sell in and out of that company. And so I think it's rather intimidating, particularly for earlier. So maybe at the developer stage, right? When I think about telling my family and friends, I'm like, I don't know that I trust you enough to pick the right explorer, but I do trust you to pick the right developer, right? Like I could say, look at a company like Alchem, who's got a lot of lithium assets. Look at like some of these other companies right there.
You're not recommending individual investments.
Yeah, sorry, I'm not recommending individual investments. I'm sorry.
I'm writing these down.
Yeah, but I guess the point is it's a little easier on that developer stage. And even like if you are not you can't really invest in most exploration companies because most people, like a lot of retail investors, are investing through platforms like Robinhood. And the TSX and ASX both don't have pay-for-flow, so they're not on those retail trading apps. You have to be, through, like an E-Trade account or something of the like. And I think that also affects things as well. But I think it's riskier in that earlier stage. It's a longer time, and it's capital depleting. So you got to wrap your head around, hey, I'm going to invest in something that's going to burn my money, and I'm going to hope to God that it's going to be more valuable tomorrow than it is now, so I can get my money back. Right? That's what you're telling someone, and it's hard if you think about it from that standpoint sometimes.
And I think it's still what's going to bring capital back in. I think a lot of it does just come back to when people see other people making capital in it, making money in it. They're going to say, well, now I'll take another look at it. And for some, they're going to go deeper and say like, well, I want to make sure I check the ESG profile or the management team and so on. Others are just going to look at the share price and say, this chart kind of seems like it's going in the right direction. I'm going to invest in it. But ultimately, until that starts to happen, it's really hard to, like, nobody wants to catch a falling knife or whatever the saying is. Like, it's really hard to see an industry that's kind of on a 3 or 4 year downturn and say now is the time to kind of come back into it. But when that trend reverses, it happens quickly. I just wanted to comment on Peggy's comment. The use of plain language is key to communicating with your audience. We should never take for granted that investors understand us. I think it's I put a LinkedIn post about this earlier this week, and I saw a ton of engagement, and I really enjoyed the discussion around it. And I've sort of always believed that. I think my thinking around that has changed, and that seeing some of these AI tools come out now, and that the post and the comments I made was, I think disclosure and press releases and everything, we actually don't need to try and turn it into a format that everyone understands anymore. I think we actually just need to be consistent and very clear on how the data is represented. And the reason I believe that now and why that's changed is because you're now at a point where anybody can say, hey, I want this press release. Here's my level of understanding technically. Here's the person I want to read it to me. And AI can generate all of these things. So every press release, as long as the data is consistent and the key points are outlined, we can now, for the PhD geologist versus the generalist who's investing with their Questrade account, they can translate that information into whatever format they need to digest it. And it kind of takes the pressure off the company to come up with almost this lowest common denominator approach to its disclosure, where it's trying to take really technical information and turn it into a format that everybody can understand without diluting the value of the technical content within it. So I think it's going to be fascinating to see over the next year or two the transformation of press releases, because I do think you're going to see investment websites where a press release goes out and there's going to be 6 different options you can click on to level of technical detail. And there's all kinds of disclosure issues with that. The difference is, as long as the company is very clear and follows 43101 of JORC or the technical guidelines, it's not their responsibility for what filter someone wants to apply to it to digest that information. I think it's pretty exciting as well, because it just opens it up, because a lot of our content and press releases are written in a way that people just can't understand. And it takes the onus off us as the people within the industry to be responsible for that translation. So I totally agree with Peggy's point. I just think the means to which we're going to get there is actually different than what I would have thought a year or two ago.
And I would say we've played around with that a lot at Prospector, right? And like, if any of you saw our poll, Matthew McConaughey, it looks like, will be the voice of our chatbot by election, by the LinkedIn community. But I think the challenge we've seen with it, I absolutely agree, Steve, it's headed that way. But if the AI isn't taught to understand mining and geology, the results you get back are so wonky. Like drill results in particular, like I think it's going to be really cool, and we kind of consider ourselves as being involved in this race to be able to solve that problem, right? So we're really excited by the fact that it's still an issue, but some of those bots, man, they did not take Geology 101, right?
Oh, I know, and that's it's but in some ways I think it's very similar to 6 months ago. Everyone said AI can't generate pictures because everyone has six fingers, and try and find a 6-finger picture now. And it's with AI, I totally agree with you. It's just the speed at which this stuff is accelerating. It reminds me of an awesome meme I saw. It was a ring you could put on with a fake finger, and it said kind of, just put this on, and then anything you do, you can just say was AI.
Well, I don't know if anybody saw it, but one of the princes from the British royal family is missing a finger in the Christmas photo, and they're debating whether it was Photoshop or the whole picture was AI generated. I think that's one.
John, I'd love to hear your insights on this, because I know this is something you're really excited about.
Yeah, so I think that when we think about these language models, I don't know that the big companies are going to focus on fine-tuning these models anytime soon that they can do geology specific tasks, but I do think there's ways in which we can use those tools internally to do the summaries more applicable. And it's actually something we're very focused on. And so, for instance, one thing we do is, at the moment, is when a tech report comes out, we actually have some scripts that basically take specific parts of the document that we know we're going to care about, things like the part that talks about capital expenditures, the top parts about OPEX, the resource reserves. And if you give it very specific prompts and you tweak the models a little bit, you can actually get it to give you pretty good results. And actually, so we do a process of extracting life of mine plans and resource and reserves out of these documents. And by you running these scripts, we can actually automate 80% of that process. We just have a human review it at the end. And it's pretty impressive. It's not something we could have done a year ago. And so, right, like basically all the inputs you need to do a cash flow analysis, right? The way that we've been setting this up is you can prompt and get this stuff out. We're excited about that. We're trying to get it ready for maybe the general public to use sometime early next year, but it's something we use our own data collection. It's made us a lot faster and more efficient. And it's really impressive when you start using rich models like this.
And I think the important part there is that your comment, you still have a human review it, and and the same for if a company uses it. I know companies use it now to generate press releases, and it's not like there's all kinds of errors in it, but what it does is it removes the first week of back and forth with your team, and all of a sudden you're editing something that's pretty close to final, and you still have to go through the same QA, QC, everything else, but it's removed. It's not replacing, but it's made everybody so much more efficient. And I think what's going to happen over time is you'll just see that human review process, and there's a trust element to it as well, just continue to shrink. I find one of the really interesting things is now it's so easy to train. Like if say it's a company or an individual, you train it on content that you've specifically created before, and then it generates it in your tone. It's terrifying, but it's now it's now doing a better job of writing content that you would write than you can yourself in your own voice, which is anyway, that's another 4-hour discussion we could get into.
Like the content version of back when we had answering machines and you had to like listen to yourself on a it's like listening to myself recording. I'm like, is that really what I write like when somebody else writes it sounding like me? I'm like, oh my God.
Did you just admit to not editing your writing?
Well, you've read my writing, John. You know, yeah. My early education in a 5-paragraph essay. Yeah. No, but I use it for proposals and email, like think that same thing. It's like, okay, I don't want to have to think through the form of all this, right? I just want to go and fine tune the details. It's incredibly powerful for that.
For sure. So we are out of time. So just a heads up, everybody. Thank you all who stuck around for this extra few minutes on the AI discussion. Definitely we'll have to talk more about that in the future. But yeah, if there's any other questions or anything, don't hesitate to reach out to the Prospector or VRIFY teams over here. There we go. And we're all on LinkedIn and everything, so feel free to connect with us. Again, thank you all for joining, and we will see you in 2024. How crazy is that? We look forward to our beginning of the year roundup next year. So thank you all, and then thank you, Steve, so much for being our special guest today. Really enjoyed the conversation.
So, thanks so much for having me. Happy holidays.
Happy holidays, everybody.
Thanks.